What about the
Okay.
traditional banks? You say you got 35 that you cover there, and obviously we trade banks. I trade banks regularly on the show, and there's been a lot of talk, on dividend raises potentially happening maybe into next year here. Talk about, who do you like from the traditional banks?
Yeah, so a lot to talk about with the other 35 names. I would start with, one of the growthier banks in my coverage. So Wintrust, WTFC, they are leaning into what they view as competitors are pulling back from their market. So they're in the Chicago area. They're the largest independent bank in the Chicago market, and competitors are pulling back from CRE lending, CNI lending, and they're seeing really good risk-adjusted opportunities on the lending side. So their loan growth is we expect it to be in the high single digits and perhaps low double digits, which is well above the typical bank is in the low single digits type of loan growth. They also have a mortgage business, so as interest rates come down next year, we should see that mortgage banking business start to pick up as people look to refi and the housing market, potentially rebounds in a lower interest rate environment. Now, we do expect their net interest margin to come on under incremental pressure, but I think that the growth in loans and their average earning assets should offset that and continue to lead to net interest income growth. And they trade in line with peers, and we're talking, 10 and a half times earnings for 2025. So you're getting a decent grower at what I view as an inexpensive price. So Wintrust is one that we like. Another growth-oriented bank, Western Alliance. They were kind of had their backs against the wall during the mini banking crisis a year and a half ago, and they managed through it very well given the circumstances. And now that they've grown their capital ratios to being essentially in line with peers because they were, I guess you could say, undercapitalized, at least in the market's view, a year and a half ago. So they rectified that, get those capital ratios higher, and now they're in position to resume being a growth bank. So we're expecting, mid to high single digit growth in loans. Their deposit growth has been through the roof, north of 20% this year. And they too have a mortgage business that should benefit with lower rates into next year. So Western Alliance (WAL) is one that we like here.